Hey guys, it's Sean. Got a mid-July 2021 market update. Lots of positive stuff to talk about today. I'm going to try to be quick, concise. I got a bunch of good topics here. We're going to talk about the adverse market fee disappearing, refinance boom 2021 in full effect, mortgage rates back down, going down, trending down, which has been awesome with twos in front of it. Mortgage application jumping way up. I'm going to talk Freddie Mac's forecast for 2021 improving and what's going on in the vacation home and second home market. And we'll end things off with a quick little tip in terms of business, whether you're a realtor, loan officer, anybody in any sort of service where consumer and their business and their trust in you and their thoughts on your business impacts the way you do business. So here's what we got going on. First and foremost, FHFA making a great announcement, eliminating the adverse market fee. They're eliminating the adverse market fee because job market's improved, income's improved. A lot of clients have gotten out of forbearance, and home prices are up. Now, the adverse market fee was put in last year. There was a lot of fear in the market. What was going to happen as the economy was slumping? What was going to happen to housing? It was very, very important that housing wasn't impacted. So the FHFA decided they were going to tax unfairly, in my opinion, all homeowners across the country. And that prevented them from getting the absolute lowest rates. Now, obviously, we had a big refinance boom in 2021. Rates are super low, but the FHFA taxed homeowners across the country that were getting conventional loans, Fannie Mae and Freddie Mac loans, and there was no warning of it, popped right in. So this is what we're doing. And, it cost most consumers that were getting Fannie Mae or Freddie Mac loans probably prevented them from getting rates at the lowest levels by a quarter percent, maybe an eighth of a point. Somewhere in that ballpark. So that's gone. So it's created a massive tidal wave of refinance opportunity that we're seeing, that we're having our clients take advantage of. We're doing our annual reviews with our clients, and it's been great. Okay, so if you refinanced in 2020 already, if you refinance in 2019, if you refinance in 2018, you should be absolutely doing a review of your refinance options in 2021. Second half of 21, we're going to see refinance boom 2021. It's already in full effect. It's been in full effect for a couple weeks here as rates have come back down. All the clients that missed out the first time around are definitely, that fear of missing out is playing a big part of it. We're seeing a bunch of people be like, oh man, I didn't get to it before. Let me get on it now. We're seeing, a lot of our clients that we're proactively letting them know what the options are, take advantage of it as well. So it's something that's important. It's a great way to save money. It's important. It should be a part of your financial planning plan to review your biggest, probably debt, biggest obligation, how you can lower that. But in some cases, we have also clients doing other things. Home prices are up, so you can, maybe if you put a low down payment down, you can eliminate the PMI. We're having a lot of success with that. So if you're paying PMI, you should absolutely be talking about refinancing, seeing where your options are there as home prices have gone up. Simply put, some clients are saving money. I had a client that I was able to consolidate a first mortgage and a second mortgage for him. He had borrowed over $1 million last year, or almost a year and a half ago. I was able to save that client $1,000 a month by refinancing today. Mind blowing. Saved another client $500 a month that I did a loan for last year. So there's some big opportunities. Now, certainly there's people that are saving $100, $150 a month by lowering their rates and looking at new terms. On the flip side, we have a lot of clients, aggressively paying down their mortgages, maybe going down to a 15-year mortgage and paying more principal, paying less interest with the hopes of paying off their mortgage faster. We've got clients that took out adjustable rate mortgages that maybe are getting into fixed rates, or maybe starting a new adjustable rate at a lower interest rate, giving themselves a little bit more security, definitely saving more money. And then lastly, we have a lot of clients. We've seen a big increase in cash out refinances. Home prices have gone up and mortgage rates have gone down. Clients are doing two things. One, there's a lot of construction going on out there. Construction's expensive. Lumber prices are high. Tougher to get contractors. They're charging more. A lot of cash out for home improvements. Also, a lot of cash out for debt consolidation, paying off credit card bills and other life expenses. So the 30-year fixed rate on average right now is down to 2.875%. Okay. Now, two reasons why. FHFA getting rid of that adverse market fee certainly helps. The other thing that we're seeing is that money's pouring into treasuries, and we're seeing those indexes go down. That's happening for two reasons. One, there's all this talk about inflation. And I do think that inflation is real, but I think we're starting to see that maybe what the Fed was saying, they were calling it inflation transitory, when things were opening back up. There was this surge of demand and everything happening all at once. And we're starting to see maybe that was accurate. Still too early to tell, but so some inflation fears are disappearing. Okay, and the other thing is that job growth is nowhere near where it needs to be. And lastly, the Fed chairman has been pretty clear about, hey, listen, we are absolutely going to stick to our monetary policy that we laid out. Still too early to say that we've recovered. We're going to stick to the mortgage-backed security bond buying plans that we have and all the other stimuluses they have, and they're not changing gear. So although they're saying, hey, things are going great, unemployment's going down, income's going up, all that stuff, still a long way to go is what Fed Chairman Powell's been saying. So that's the reason mortgage rates have come down, is to the inflation fears easing and job growth not being where it needs to be, and the economy not growing as fast as they had hoped. So we're seeing money pouring into treasuries, into safe havens, and bottom line is mortgage rates have come down. So mortgage rates, 30-year fixed rate average in April surged. If you guys remember, we were in the high twos in January, February, March, surged in April all the way up to the mid threes, or 3.375. Now they've come down almost a half point, 2.875, and it's making a big impact. Why it's making a big impact is home prices are still going up. So it's welcome news for potential home buyers, in order to, pay for these higher priced homes, to borrow that money cheaper. And on top of that, if you currently have a mortgage, you can, redo that mortgage and save some cash. So welcome news. If you missed out on refinancing, get in on it. If you're currently pre-approved and looking for a house, and maybe you were pre-approved 2 or 3 months ago, see how that lower rate can impact your budget. Can you borrow more money? Does it lower your payment? Does it create more inventory for yourself? Bottom line, it's good news. It's caused mortgage rates to jump big time. So mortgage rates jumped up 16% last week. So after several consecutive weeks of dropping, mortgage applications actually jumped up 16%. So that's been good news. Sudden increase in applications driven heavily by refinances. So refinance surged 20%, purchase applications surged 8%. Part of the reason they jumped up too is, things tend to slow down around July 4th weekend. So, with July 4th's over, people are back at it. The other great part about it is, on top of mortgage rates dipping, we're seeing some home inventory popping up. More and more listings are coming across the board. That's what I'm hearing from all our real estate partners out there. That's what we're seeing with the data. So as more and more homes come on the market, more and more people apply for mortgage. What I did notice in the market, and this is important, there's definitely been some little bit of buyer exhaustion out there. I'm not sure if you guys are hearing that or seeing that, but home prices went up big time this past year. There was a lot of bidding wars. A lot of waiving of contingencies, waiving inspections, appraisals, pretty much like, craziness going on in terms of getting an offer accepted. And that slowed, that definitely wore some buyers out. And a lot of buyers said, you know what, I'm going to get back at it in the fall or later in the summer. I think it's a great opportunity right now because there is less buyers out there. On top of that, the world's open again. People are on vacation. People are going, doing things, activities, kind of less focused maybe on housing. Could be a great opportunity in July and August for potential home buyers to get in the market. Maybe less bidding wars, maybe less interested buyers, and get a house. So if you're seriously considering moving, do not wait until the fall. Keep your eyes on the market. Keep talking to your agents. Keep looking online. Keep looking at the listings you're getting, because you don't want to miss a great opportunity, especially with low rates and maybe a little bit less competition this summer than in past summers. Let's see what else. Refinance applications are about 64% of the total applications out there, again, because rates are so low and there's just so much refinance activity going on. As a result of all this stuff, and rates maybe being a little bit lower than expected, Freddie Mac changed their forecast for 2021. So here's what they said. They give their quarterly outlook last week. The low mortgage rates have propelled the housing market through COVID-19, are expected to rise later in the year, but they'll do so gradually, so we're not seeing a big spike. This will give final opportunity to homeowners to refinance their mortgages. In their estimation, 2021 will rival last year's incredible performance of $4 trillion origination volume. So Freddie Mac is now forecasting total mortgage originations in 2021 to check in at $3.9 trillion, up from its forecast earlier this year. They were forecasting $3.5 trillion. So a huge increase in volume, and the fact that it's mid-year gives it additional credibility because they've seen how things have kind of checked out. So expecting to be a huge year. The average 30-year fixed rate is expected to be 3.1% in 2021 and up to 3.7% in 2022. So they are expecting a pretty big increase in interest rates going into next year. In 2020, the 30-year fixed rate was also at 3.1%. Now, this is an average. That means it's lower, at, or above. Rates aren't, they move constantly, up, down, up, down. We're trying to give forecasts every couple of weeks to let you guys know what's going on. Sometimes they're going up, other times they're going down based on market conditions. But the forecast for next year is 3.7. I will tell you, they were spot on for 2020 and they were spot on for 2021. So the fact that they're saying rates are going up, there's some credibility to that, and it's in line with what the Fed chairman's saying and the Fed is saying in terms of what their plans are in their monetary policy. The big reason they're so low, on top of all the stuff going on in the markets, the Fed has remained steadfast in buying mortgage-backed securities and bond buying and doing everything to keep the housing market strong. And again, they're not stopping there. So home price growth is expected to hit 12% in 2021. So big increases in home prices based on what's going on out there. Big demand, low inventory, low rates affordability. On top of that, you've got unemployment improving and you've got income going up, right? So they're expecting 12% in 2021 and home prices to increase about 5.5% in 2022. In comparison to last year, home prices rose about 11%. So again, I said it already, I'm going to say it again. Rates will go up next year. Home prices will continue to go up. Getting in the market now, even though it's tough, is more important than waiting until next year. Okay, and why that's more important is because whatever you buy next year at higher rates and higher prices is going to be much more expensive. Your payments can be significantly higher than you got it. So I know it's tough out there. I know it can be overwhelming. And I know it can be stressful and anxious. Working with a great real estate agent that really knows what they're doing will be a big difference maker. Working with a mortgage professional we'll get you pre-committed. We'll go through a pre-approval, educate you on your budget, your max, your comfort zone, your monthly payments, your down payments, your closing costs. Really important. It eliminates a lot of stress and anxiety. We've got all sorts of tips and tricks and advice that we can give you to help you get your offer accepted and differentiate yourself amongst all the different buyers out there. So take us up on that. Our goals are always, how can we add value to our clients in order to help you win and get your offer accepted? Now, if you already own a home, we've got all sorts of tips and tricks as to how we can help you save money on your mortgage or get in line with what your financial plans are and your goals are going forward as well. So some other things, they think that Freddie Mac's forecasting that originations in purchase volume will increase to 1.8 trillion in 2021 and 1.9 trillion in 2022, up from $1.5 trillion in 2021. So they think more listings are going to come on, more buyers are going to be able to have their offers accepted. Economy is good, stock market's up, income's up, unemployment's down. There's more affordability out there with low rates. So they think the purchase market's going to remain robust, which is a great sign. Then they think refinance forecasts will increase higher this year versus last year as well. So overall, a good year. As the economy continues to be on the mend, the housing market stayed extremely strong. Okay, it's probably the strongest sector of our entire economy, which has been great to see. The U.S. housing market's always remained strong. I think you've always heard people say, house prices will always go up. Over the course of time, they will. And, credit is tougher than ever to get. What I mean by that, and that's a good thing, credit scores are up, income, asset verifications that we do, the way we look at appraisals, they're all stricter than ever. So that means the foundation of our housing market is strong. There's not this big tidal wave of foreclosures and short sales that are coming. Most of the mortgages out there are fixed rate mortgages. So there's a lot of stability created based on the financing of this debt as well. It's not like there's this tons of speculation. There's not a burst of this bubble coming until, unless something drastic happens. But bottom line, with low inventory and high demand, you can't have a bubble that bursts, right? So, so that's what Freddie Mac's forecasting. Couple other things, just timely advice. Vacation homes. I'm licensed in all 50 states. I'm doing business across many different vacation markets. That market remains strong. What I'm seeing out there is a couple things. Home prices on second homes and in vacation markets are up 28% year over year. Think about that, 28% in 1 year in the vacation home markets. Okay. However, sales are down 11% in vacation homes 1 year over the other. Now, why would that be down? Well, it's down for a couple of reasons. Inventory is way down. Go to some of these vacation home markets. There's like nothing on the market for sale. So of course, sales are down. On top of that, on top of lack of inventory, the reopening of the workforce is last year at this point, people were looking for somewhere to go so you couldn't travel. You didn't want to be stuck in the city. So people bought second homes and lived there for 6 months, 8 months, moved out of state, moved to all these places that were more affordable and work remotely. Some employers are calling everybody back in. So maybe that second home is not as appealing as it was before. I still think that you're going to see massive appreciation in the second home markets because I think that demand is not going to decrease. I think people like the fact of not having to travel and having family space. Also, lending on the second home market has tightened up a little bit. Back in March, Fannie Mae and Freddie Mac announced they were going to limit the amount of second homes they were going to take on their books. So that caused rates to bump up a little bit, and loan to value changes and debt ratio changes as well. We saw across people still trying to figure that out. But bottom line, if you're out there, if you're in a vacation market, you're like, I have to live here. I don't want to be in a hotel. I want to buy a house, or you want to upgrade your second home. We do business all across the country in all 50 states, and we do tons of second home financing. We have some unbelievable rates, unbelievable products, with even some low down payment options. In jumbo markets, our rates are really great, both adjustable rates and fixed rates. So if that's something you want to do, whether you're in the Cape, Florida, the Carolinas, doesn't matter, any type of second home market, or you're going north to Maine and Vermont, let us know. We'd love to help you finance that. And the tip of the week, I want to wrap it up with this. It's more important than ever, okay, to ask for reviews. If asking for reviews is not a part of your process, then you are absolutely missing out. Every single time somebody is going to look up a business, we all do. We Google you. We go on LinkedIn. We're trying to figure out ways like, what do we know about this person? What's their credibility? What are other people saying about them? It's an easy way for people to get to know a business, like a business, and trust a business. So it's really, really important that you're asking for feedback, and reviews from your clients. So every time you should, most big businesses, you go in there, they have a very structured review process. So, one of the things that we do is we're constantly asking for reviews. We've automated the process entirely via text, email. We have a process to ask them over the phone. Okay. So after every single closing that we do, whether it's a refinance or purchase, we are systematically asking our clients for a review. Now, obviously, if it's great and they tell us we did an amazing job, we want everybody else to know how great of an experience one of our clients had, because it helps our business grow. If it wasn't great, we want to get on the phone with that client and we want to figure out what could we have done differently to give you a better experience. And we're asking for brutal, honest feedback from our clients, and then we're thanking them for it because feedback is a gift. And then most importantly, we're implementing systems, processes, and communications and trainings amongst our staff, so that we don't have the same problems over and over and over again. Sometimes people are afraid to ask for reviews because they don't want to hear what didn't go well. That feedback is more important than the client telling you they had a great experience. You want to make sure when somebody checks you out online that there's reviews. It's important that they see the great ones. It's important they see the not so great ones. You want it to be authentic, but make sure you have a system and a process to automate your reviews, and you got to ask for them in which people are going to want to be able to do them. So if it's Google, if it's Facebook, if it's Zillow, Yelp, you name it, make sure you're asking for it on the platforms that your clients are going on and checking you out, and make sure you're making it easy for your clients to do it, and make sure you're doing it with email, text, and calls, and obviously in person or maybe over Zoom. But that's the tip of the week. So I hope you guys have an amazing week. Hope July's off to a great start, and let's hope that we have some amazing weather this summer. Happy mid-July, everyone. Hope this was of value to you.